firstly, thank you to everyone on the line, and obviously thank you to our hosts at Red Cloud for putting this event together. We're extremely happy to be here and present, I think, a pretty interesting story at a very exceptionally interesting point in its growth. So, as some of you who may be new to the story or follow us closely might know, we have recently released an initial assessment for our flagship Kabanga Nickel Project. That was out just last week. And so a lot of the content of this presentation is going to focus on the results of the IA, which is equivalent to a Canadian preliminary economic assessment. And it really exemplifies, I think, the fantastic economics, the fantastic cost profile, production profile of what is one of the world's largest and highest grade nickel sulfide deposits, and truly, one of the only nickel deposits that should be or could be built in the current price environments. So let's get cracking. We have some forward-looking statements and some other disclaimers. Please, this presentation is on our website. Please refer to it in your own time. So what is Lifezone? So Lifezone, we're NYSE listed with the ticker LZM. And really, we're this hybrid company where we have this core technology called Hydromet, which is our form of hydrometallurgical processing. And what that does is it's really this key enabler that we use to unlock opportunities, specifically our flagship opportunity, which is the Kabanga Nickel Project, which we're advancing in Tanzania in partnership with the government and BHP. We're also using our Hydromet to recycle platinum, palladium, and rhodium through a partnership with Glencore to recycle automotive catalytic converters in the United States. And we've been, I think, I guess we've received strong support from key institutional shareholders like Synctive, BlackRock, Grantham Mayo, and due to the significance and scale of our projects, we've attracted significant interest from the likes of United States Development Finance Corporation and Japan's JOGMEC. Over to you, Ingo.
Yeah, thank you, Evan, and thank you to Red Cloud for hosting us. Good afternoon and welcome everyone to our call today. As Evan said, the majority of what we want to talk about is the Kabanga Nickel Project in northwest Tanzania. This is the photo of our campsite. It's a well-developed and set up place by now. The release of the IA last week was really a historical milestone for Lifezone and for Tanzania. It's, as Evan said, the first economic study in Kabanga in nearly 50-year history, and the first initial assessment filed under the US SEC regulation SK 1300. It comes after decades of drilling and more than $400 million of investments by Lifezone over the last couple of years and former owners Barrick and Glencore. This means that the project is well understood, and as you will see in the coming slides, well advanced and de-risked in many aspects. Our vertically integrated strategy, starting with an underground mine and concentrator at Kabanga, is followed by a hydrometallurgical refinery at Kahama, which provides robust economics and a solid technical foundation ahead of the feasibility study release, which we expect to complete in July 2025. So it's just a couple of weeks out. We are aligned with global ESG standards and Tanzania's clean energy goals. And we have also identified 4 high-profile exploration targets with significant upside potential. So please stay tuned for the release of the feasibility study next week. And now talking about the initial assessment, I think we have produced something very robust here. We have been in charge and managing this project for several years now. We raised $70 million when we listed in the New York Stock Exchange 2 years ago, and then we introduced further North American investors. That money has been put to use wisely, and this is the outcomes of it. The numbers you see here is really on a project basis, so it's 100%, and it includes measured, indicated, but also inferred resources. The after-tax present value is $2.37 billion at an 8% discount rate, and conservative consensus long-term nickel, copper, and cobalt prices. The after-tax internal rate of return is 22.9%, and it considers the fiscal regime in Tanzania that we agreed with the government when we signed the framework agreement a couple of years ago. The pre-production capital expenditure is around $1 billion. You should add to this probably around, and this is in our press release from last week, $100 million of operating and startup costs that we are capitalizing up to the point when we reach commercial production. The all-in sustaining cash costs are $2.71 per pound of refined nickel. You will see a little bit more in the coming slides, but I think it goes without saying that even at current rather depressed nickel prices, that would be a solid operating margin of more than 50%. The Kabanga mine and concentrate is based on economics, is based on a 22-year mine life, and we expect that we will find more material so that this will ultimately be a significantly longer operation. The total feed is around 70 million tons of ore, but what really is attractive here is the grades. So we are mining around 2% nickel with quite relevant copper and cobalt byproduct credits. In terms of the size, I mean, this is going to be one of the bigger operations. The integrated plan from the initial assessment assumes 50,000 tons of nickel in sulfates produced in the refinery in Tanzania, and then 7,000 tons per annum of copper cathode and 4,000 tons of cobalt sulfate. So the real engine behind the results is the outstanding grade profile of the asset. Here now we are at attributable resources. That means we have the Tanzanian government at 16%, and in the structure BHP is 17%. So this reflects around 70% that is attributable to Lifezone shareholders. But what this really shows, these are the top 40 projects globally, that there is a significant gap between Kabanga and most other undeveloped or even developed nickel deposits out there. The deposit was discovered in the 1970s. On the left side, so where the main ore body is, was a lateritic outcrop, main outcrops, and then you have a really strong core with north, and then and this is now 7.5 kilometers from the south to the north. We and others before us have drilled 600,000 meters into this ore body, so it's very well geologically and geotechnically defined. And then the last 1.5 kilometers, we didn't need to drill to get a solid study together, but whenever we drilled, we still get solid 2% plus nickel intercepts. I think what's just important, because there aren't really that many nickel projects currently around, and therefore for investors that are more familiar with copper grades, at pretty much any price point, spot prices, long-term consensus prices, this translates into a copper equivalent grade of 5%. So, I mean, this is globally significant for any kind of base metals project. And we drilled a couple of drill holes into the Safari Link at the end of 2023, and you can see here the intercept. So the ore body seems to continue. And then in addition, we have 5 prospecting licenses where we also expect to build the ore body over time. We looked at attacking this ore body open pit, but even though it's outcropping at main and relatively close to surface in the north zone, we will need to do open stoping pretty much for everything. So the overall plan was better conceived to just be an underground mine and start actually the portal construction as soon as possible. We're fully permitted to do that. And there will be therefore no surface disturbance, besides, of course, building the mill and the concentrator on site. Here a little bit more in terms of the development path. Open stoping, 25 meter stope, all very conventional. You can see also the air vents here, these kind of the vertical lines, air in, air out. The mine plan really covers all 5 mineralized zones via 2 declines. There's a little bit of a shift here, so the between the north and the Tembo ore body, the ore body is not connected. On-site concentrator will produce high-grade nickel, copper, cobalt concentrates, high value and low impurities, 17-18% nickel grades. Copper and cobalt will be payable. We have had in-depth conversations with smelters who will buy this material. It's all very conventional. We have worked with DIA as our study partner. DIA have been heavily involved. It's a very well-established engineering firm in Africa, but also globally. They've built most of the Ivanhoe operations, or designed them. Similarly, pretty much everything that Glencore has ever done was DIA in Senate. So a very established firm in Joburg. Our owners team and our CEO also South African, and they spend most of the time in the offices of DIA. So when you then go from the mine mill concentrator, you have to go around 340 kilometers to Kahama. Kahama is a town, but it's the town where the old Barrick Buswagi mine site is based. That mine shut down a couple of years, but we're taking the industrial land in the mining area over in close cooperation with the Tanzanian government and Barrick. Barrick has upgraded the airstrip there, which is really helpful. So it's now a commercial airport. You can fly 3 times a week to Kahama. It has a town of 250,000 people, many of whom have worked in heavy industries and in mining, as you can imagine. So it's a really ideal location, and it has a rail link and a highway connection that then can take material in and out to Dar es Salaam, which is a deep sea water port. In terms of the cost profile, mining, of course, is a really important component because it's underground mining, and it's quite selective mining, which of course is good in the sense of low dilution and low mining waste. You can see also here the other component is the refinery in Kahama. The key thing in terms of the refinery costs, that's really electricity. Electricity in Tanzania has become very reliable in the last couple of years, and also very green, because most of the new power stations are in fact hydropower stations. And then you see royalties and of course sustaining capex, and then the credits that we get for copper and for cobalt based on term sheet conversations. So all-in sustaining cash costs of 2.71 is I think really quite attractive. If you look at the cash curve, cash cost curve, of course, the industry is now dominated by Indonesia. I remember times, first time I worked on a nickel project, which was around 15 years ago. I think Indonesia had 7% of global nickel production. By now, it's almost 70%. So there was a real shift. Of course, the shift also meant that prices in the last couple of years reduced quite significantly, and quite a few Western operations had to shut down, smelters as well, including in Canada. If you look at Thompson, where you want to be nowadays is, of course, left of this kind of middle part, which is either the Indonesian MPIs or the HPAL operations. So I think this shows how well positioned the project is, and also that it's going to be a bankable project from a project financing perspective, a process that we have recently started with SocGen, an international lending bank. In terms of what has really changed, I mean, first of all, we have invested quite a lot of money. We have built a strong team in Tanzania and a global engineering team. But one of the reasons why this project wasn't built earlier, because it was an attractive project right from the discovery in the 70s, is really the investment in infrastructure in Tanzania. So we are now connected by road. We have been connected more than a year ago by TANESCO, the state utility company, with the power lines. We don't run this site on diesel generators anymore. And in the last couple of years, also an airstrip was built more than around an hour ago from our side. So that's one thing. The other thing is that Glencore left us when they sold the project to us, a 200-person camp. You saw the picture before, so would be quite a replacement cost to rebuild that. The road down to Kahama is very well laid out. It will need some investments and improvements, especially from a safety perspective. Currently, it's a very quiet country road. Kahama, as I mentioned, is really the old Buswagi gold mine that drove the development of that place. It has a rail terminal, and then it's still 1,000 kilometers down to the port of Dar es Salaam that was recently acquired by Dubai Ports and is one of the biggest ports in East Africa and one of the key ports also to imports chemicals for the copper belt. So it's a well-developed port, lots of laydown area, well-established, efficient. And a big difference really over the years is the power system in Tanzania. So there were 3 significant hydroelectric stations built recently. It's not the only ones. For us, the most important one is actually the Rusumbo. The first one, it's just a smaller one, but it's within 100 kilometers from our site, and that's where our electricity comes from. So that's great. And being close to the coast, Tanzania has seen plenty of rainfall every single rainy season. So like in the interiors of Africa, where you sometimes have seen sporadic rain pattern, this was not the case in Tanzania and also Mozambique. The standard gauge railway project is probably the flagship infrastructure project in Tanzania. It is funded by Western organizations, states, and built by a Turkish consortia. It's actually an upgrade. So most of the railway line actually exists, but it's being upgraded for standard gauge. You can now take to the new capital, Dodoma, you can take really modern passenger train, and there's also freight trains running. So by the time we need the connection upgraded to Kahama, that will be completed. In terms of the project setup, so we are listed at the New York Stock Exchange, as mentioned. We have a holding company in the UK called Kabanga Nickel. That holding company has a framework agreement with the Tanzanian government. There's also a bilateral investment agreement and an international arbitration clause. So that's already well set up. BHP invested $90 million in Kabanga for 17%. And then the Tanzanian government is an important partner of ours at the project level. And there's 2 operating companies, Kabanga, so the Temple Nickel Mining Company, which owns the mining license, and then the refining company that encompasses the refinery at Kahama. The relationship with the Tanzanian government was really advantageous for us. I mean, I spoke already about the power, but permits have generally been coming through quite well. We have, besides what you can see here, the special mining license already in 2021. It covers the whole deposit for its life. Yeah, it doesn't need to be renewed. There's a refinery license already received last year. Kahama was declared a special economic zone, no income tax for 10 years, plus other advantages in terms of import taxes are exempt. We have an environmental impact assessment. We have an environmental management plan signed off. We could start construction of most of the pieces on site. And we have agreed a resettlement plan for a couple of families that reside on the site. There's no villages, but that already is well advanced. We have compensated more than 95% of the families, and there's a lot of legal certainty for us and the stakeholders, communities that we are dealing with. In terms of looking ahead, the feasibility study in a couple of weeks is going to be the next big highlight. That's focused on the underground mine and the concentrator only, and will for the first time release a reserve for Kabanga. We have released two, if you want to read up on this, we've released two mineral resource updates during the time we owned the deposit. Kabanga nickel is a strategic mineral for Japan, Europe, and the US. And we have an initiative with the US DFC around loan support, guarantee support, and political risk insurance. And we have also had already conversations with US Exim with their supply chain resilience initiatives, as well as various European and Asian organizations. JOGMEC is mentioned here, but there's also a couple of European states that provide guarantee schemes for not only exports, but also for the import of concentrate. That concludes the part on Kalhama. A couple of words to our second segment, which is the PGM recycling project. What you can see here is our own Hydromet lab facilities in Perth. In these facilities, we had a pilot plant running to also produce the first cathodes, as a nickel cathode, cobalt rounds, and copper cathode from material from Kabanga last year. So it's a well set up, well established Hydromet lab. We do testing there for third parties. We also do flow sheet development, and we do our own work. So that has the big advantage that our projects have priority. And of course, we maintain and retain the IP. We have around 30 scientists, processing engineers, Hydromet engineers working in this lab. And the main focus for them, that the feasibility study for Kabanga has come to a close, is the PGM recycling project, which we're advancing together with Glencore, and which is focused on recycling autocatalytic converters in the US. It's a faster and more efficient and less emission intensive way to recycle PGMs. It provides, it's only using autocatalytic converters. And we expect that we see a lot of interest there from investors in the near future, because PGM prices have seen a resurgence in the last couple of weeks. We are currently in phase 1, which is jointly funded between Glencore and us, which is confirmatory program as a pilot work. We have been working on this concept for almost a decade. What we are doing here in terms of the confirmatory stage is really taking current autocatalytic converter waste out of the US and testing the results on platinum, palladium, and rhodium. And we're getting in the first two over 99% recoveries, and in rhodium it's around 95, 96. So it's looking very, very good. The advantage really is that the capital intensity is much lower than building a mine. So for around $20 million, you get a 115,000 ounce per year PGM operation. If you would rebuild this in South Africa, you have to multiply this by far more than 10 times. Glencore has funded the first phase in equal times than us, 1.5 million, and received a 6% stake in that venture. In terms of just a corporate wrapper now, the Kabanga Nickel Project is really our flagship project. And the second project of the rank is the PGM recycling project with Glencore. We listed 2 years ago, as I mentioned, we raised $70 million from a list of blue chip investors. We have good rating in the stock. At the start of last year, when nickel was slightly challenged, we needed to go to investors to really understood the quality of the asset. And you find this investors usually in Canada, where there's a long history of nickel mining. Most of the people that worked on the early stages of Kabanga were all Falconbridge guys. So Harry Lundin put together a $15 million convertible debenture instrument. It's a 4-year kind of instrument. It picks and pays in shares for the first 2 years, and then it's cash interest. We yeah, and the support globally is quite strong around the Mineral Security Partnership. There's research out there, so please feel free to reach out to North American as well as European analysts. And I guess with this, I'll probably hand back to Taylor for a Q&A. But to sum it up, I mean, Kabanga is a globally significant nickel deposit. It really benefits from high grades, but also from byproducts. As you could see, it's de-risk. In terms of the permitting, we have not every permit in hand, but we have all the permits we would need now to start construction. In terms of the next steps, project financing is the activity and getting to a financial close in early next year. It's therefore probably one of the most advanced nickel development projects on the planet. Yeah, thanks for listening in, and very happy to take questions.
Great, thank you very much, Ingo and Evan. So now we'll turn to the Q&A portion of the webinar, and just a reminder to everybody on the line that you can type your questions into the chat box at any time. To get started, maybe just in terms of the maybe just talk a little bit about the support from the Tanzanian government. I know they're keen to see the project up and running. How is that partnership working, and do they have any offtake rights from the project?
Okay, yeah, it's a good question. So the arrangement that we have with the government is not unique. It's the new arrangement that was put in place a couple of years ago when Barrick had to rearrange its fiscal regime with the government. So also Barrick in their operation has a 60% stake. We have a 60% stake by the government. The government has two representatives at the local board, very constructive relationship. They actually help us very often in terms of opening doors or lobbying effects if our very competent local team needs some help. I think the most important thing was that they really guided us from the district level down to the central level in many aspects. We put a lot of effort in, of course, on the issues as the environmental social impact assessment, the environmental management plan, etc. But ultimately, when we had the studies ready, when we had the monitoring ready, when we had the household studies or anything else that we needed ready, the government was usually not a holdup. So I think that's a really important point. I think it's also important to mention that Tanzania is well known for mining. It has a diamond mine. It has a couple of gold mines, a couple of quite sizable gold mines. But there wasn't really any major mine development in the last couple of years. I mean, actually, in fact, I think it's more than 2 decades ago, or 15 years at least, that there was a major mine development. So they are also really keen to get this off the ground because in relative terms, that operation will match some of their biggest gold operations in the country. So we expect once the feasibility study is out that the government will be very keen that we start construction as soon as possible and do everything to support us, especially in relationship to international lenders. The country is also very bankable. As we mentioned before, I think what I said before, one leg of the upgrade of the railway was a $1.6 billion project financing piece led by Standard Chartered and South African banks, and has seen a lot of interest and was funded by international commercial banks. So the credibility of the country in that context is very high. It's also a well understood country worldwide. It has oil and gas projects. I mean, infrastructure-wise, it's important. Military-wise, it's strategic, and it has a thriving tourist industry, which also means the country is very safe to operate in and to travel in. On your final question, the government has the right to 16% of dividends, no offtake rights, and then of course there's the usual set of royalties as well as other indirect and direct taxes that usually apply.
Perfect. Okay. Maybe sticking with the theme of governments, in terms of the U.S. and their push to secure critical metals and metals that are strategic for them. Is there anything that's new that's come out from the administration in the last little bit that would benefit you guys in addition to kind of those agreements that you've already executed and set up in the last little while?
Yeah, I mean, I can only say so much. I mean, we are in-depth conversations and due diligence with a couple of national institutions or national policy banks, and the US is one of them. We have not seen any change with the new administration, quite the reverse. It seems they seem to be focusing more on really significant and strategic projects in strategic places. So from that perspective, yeah, we are running through the due diligence process with them and others, which we expect to go public because they need to simply publish that on their homepage, similar to what the World Bank and the IFC needs to do in the next 2 to 3 months. So there will be announcements coming out when their work comes to an end. I mean, we are very pleased with their engagement, and of course, political risk insurance of a significant magnitude from the US makes a big difference.
Right. Okay. Perfect. I'll put out another call for questions from the audience. Please, if you have any, just type them into the chat and we can get to those. In terms of so catalyst coming up, you've got the DFS coming next month. After that, what is the cadence of news flow, and what do you expect to make that?
I think the really important thing is, I can't stress this enough, is that from a permitting perspective, we have everything we need to start early works. There's of course always smaller permits that you receive as you get going. After the feasibility study, there's one element that we need to work out with the government, which is called the joint financial model, which ultimately means it freezes or enshrines the fiscal arrangement with the government, because there's this kind of equitable sharing concept. We have currently a team in Tanzania negotiating this with the government, so it's relatively well advanced and down to a short list. So we don't expect, and there's a lot of push from the government as well to get this now closed off, but they were waiting for our numbers, and we have presented updates to them in the last couple of weeks multiple times. So we are there quite a lot. With this, we could actually start this year with early works, and that's the plan, and then conclude project financing and get to a financial close as soon as possible. And that would then allow us to construct, and the final investment decision, I think, is the big milestone, and somewhere around within the 12 months period.
Okay, so those that initial site work is not contingent on the overall project financing.
Correct. So, for instance, I mean, there's already a detailed engineering plan to start the portals, site infrastructure, earthworks, securing all the parameters, not just the camp, as we have various camps already, final engineering design, and then of course also significantly ramping up our footprint in Tanzania. We have a strong, good team there, but we will of course need a lot more people.
Okay, and then in terms of the other aspects of your business, the Hydromet Technology and partnerships there, is that kind of in the background until you get through this next little phase at Kabanga in terms of getting the feasibility out and getting some of this initial work done, or is that moving ahead on a parallel track as well?
Yeah, I think what's really, the Hydromet is really interesting. I mean, you can see it in Indonesia. I mean, it makes a big difference there, and it works really quite well. It's slightly different because they process low-grade lateritic materials, and we will process high-grade sulfide materials. So very different in terms of what goes in, because we put a highly concentrated concentrate into it. So no, the Hydromet material is not somewhere in the background. It's the backbone of everything we do. In Kabanga, in this case, in PGMs, in this case, and there's a long list of other. So we have patents in this space. When we have a long list of other projects that we want to work on. So these other projects have been a little bit in the background because we simply were busy in the piloting of the Kabanga project as well as the AutoCAD recycling. But the moment the lab becomes a little bit more free, they also work for third parties, not just in the nickel space, but also in the PGM and precious metal space. And we of course need also to build a demonstration plant. That's actually part of the initial assessment, to not go full scale at Kahama, but build a sizable demonstration plant there, and then only, of course, start the construction once this is proven of the bigger refinery. But yeah, from our perspective, pretty much everything that will come after Kabanga and PGM recycling will have a flavor or a link to Hydromet.
Okay, excellent. Okay, I'll put out a final call for questions, and maybe while we're waiting for that, Ingo, if you could just sum up and give kind of your final pitch to investors, any final thoughts you want to leave with people before we sign off here.
Sure. No, I mean, also thank you, Taylor, for hosting this. I mean, I guess in pretty much any mining project, grade is ultimately what someone should look out for. And if you can combine really a exceptional high-grade deposit with a long life, that as long as you can mine it, and in our case, we're pretty certain about this. We did a lot of work on this. You get a solid project, and then a long life, low-cost project is something that should advance at any point of the cycle. Nickel currently is seeing some challenges, but with a operating margin of higher than 50%, looking at the IEA numbers, I think we have an outstanding project. And you can also see this currently with our share price development. And we took some time to get there. It was a long journey to release the study, but it was absolutely worth it in all aspects.
Excellent. Maybe a final question here. When you did put out the economic study, you also outlined some exploration targets and potential on the project to expand the deposit. Is that something that's for the future, or is that something that you might explore in kind of more near term, medium term?
Yeah, I think there's a couple of aspects here. I mean, we know from all sorts of geophysics and geochemistry, etc., there will be more. I mean, we know it, BHP knows it, the whole industry knows that. There is actually a nickel belt that really runs from Burundi into Tanzania. It's a well understood nickel belt. There's a couple of very good deposits, also lateritic deposits, so it's not just sulfide. We are clearly the flagship deposit in this area, but we had to lock in the mine plan at some point. So there was no real point anymore if you have 20 plus years mine life to drill. And as a junior company, you need to set priorities and have a focus, especially if the commodity is facing headwinds. So our decision was, we stopped drilling a year ago. We know where to drill. We know where we will find something, but we don't need that material in the next 20 plus years, which ultimately means, I'm sure, once we're in production, the drill rigs, I mean, obviously drill rigs will then anyway re-emerge once you're in the ore body, when you have your decline, and we will use these drill rigs then also to expand the deposit along Safari Link and some of the other satellite deposits that we had, for sure. I mean, it's always good news flow, and people want to see that in 10 years' time, you're still a 20-year mine life operation.
Yeah, exactly. Makes sense. Okay, perfect. All right, I think we'll wrap things up there, and I would like to thank Ingo and Evan from Lifezone Metals for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.